Welcome to the Transparent FX Academy. If you're new to the channel, I'm Nick and I've been a top author on TradingView for many years, as well as being one of the only traders with a fully verified MyFX book track record. So if you want to elevate your trading, you're definitely in the right place. So subscribe to the channel, and without further ado, let's jump right into it. So take a second, pause the video, read the disclaimer, and I will see you on the charts. In this video, I'll speak about EURUSD. Now, as usual, to keep the video as educational as possible, first, I'll give you the technical aspect, then I'll move to the commitment of traders analysis to see what institutions in the market are doing, and then I'll put together these two different types of analysis. So this is definitely a video you do not want to miss. Now, starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly demand and support zone. In fact, from here, all these previous rejections to the upside were created. Every time the market tested this zone, it rejected it to the upside quite aggressively. And what we can notice is that in all this period, there is only one time in which the market managed to break below the zone, which was right here. The market broke below and then broke back above the level and continued acting and respecting this area as support. And what we can see right now is that we just had yet another test of the exact same zone, and the market has already started rejecting it to the upside. So in a situation like this, more bullish price action could be expected away from this area, as already happened in the past when the market was testing this exact same level. So on the monthly, so on the long-term perspective, everything is quite clear. Let's drop down on the weekly time frame and see what we have. Now, here on the weekly, the price action is very clear. We can notice a perfect inversion of trend. The market went from the creation of weekly lower lows and lower highs to then having this double bottom created exactly at that monthly demand and support zone that we have just identified. And now the market has shifted to the creation of weekly higher highs and higher lows. So we are now in a bullish market with a bullish trend from a weekly standpoint. We can also notice that the market is currently testing horizontal structure. This zone, in fact, was acting as previous weekly resistance preceding these two rejections to the downside. Then the market broke above that zone, and that previous resistance was turned support all across that zone. And there is now good probability of seeing bullish price action being created away from this area. So here in the weekly, everything is quite clear. We have previous resistance turned support, currently rejecting to the upside quite aggressively, with the start of the week already being quite bullish. Just a quick interruption. Let me know in the comments below any new pairs or topics that you would like me to cover in my next videos, because I'm always open to suggestions. Dropping down on the daily time frame, what do we see? Now, here on the daily time frame, what we can notice is that, first of all, we had the creation of this M pattern testing that horizontal level of support that we have just identified. And I spoke about EURUSD just a few days ago when the market was at this level, and I explained all the reasons for which I was expecting this rejection to the upside, which is in fact exactly what the market just did. And by the way, I will link in the description that previous analysis, so you can go and check it out for more free education. But at the moment, what kind of structure we have? Well, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing on the euro, therefore on EURUSD, because again, all currencies on the spot are traded against the USD. And what we can see is that net positions with the last reports have been decreased massively. We went from 125.6k net positions down to 114.3k net positions. So we had a clear decrease in net positioning, with institutions adding 2,600 shorts just with the last report, closing 700 longs, another 3,100 shorts added with the previous report, closing 4,700 longs. We are missing the last reports because the US government is currently in shutdown, therefore they have not released the new data. But if this trend is continuing, which is what I would expect, essentially we should see more shorts added with the last report. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked as well in description, so you never miss new updates. Now back to the analysis. So in a situation like this, in which institutions have already started adding some shorts, what would I expect? Well, what we have to notice is that while the market is creating this push to the upside, it is also creating a bearish pattern, which is this W formation. Now, a W formation is simply the opposite of an M pattern. After an M pattern, what you expect is a rejection to the upside, completing the M pattern at the neckline. We have seen this pattern over and over again. We just had it here with the market creating the rejection higher, completing it at the neckline. We can see another M pattern here. After that, the market went higher, completing the pattern at the neckline again. What we had is, for example, also right here, we had this big M pattern. After that, the market pushed higher, completing the pattern, the neckline. A W formation is simply the opposite. So after a W formation, like this one here, for example, we see the completion at the neckline of the pattern. So right now, what we could expect is to see some short-term bearish price action completing this W formation at the neckline. That definitely wouldn't surprise me. So if the market will head inside of this area of previous support and resistance, which it is basically exactly what it's doing, I wouldn't be surprised to see more institutional shorting. So what would I expect? Well, as usual, and as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bullish to a bearish market, I wouldn't be surprised to see a potential push lower, completing this W formation at the neckline. That definitely wouldn't surprise me. Now, everything that you see me share here on YouTube is just the tip of the iceberg. In fact, if you want to learn more, I really suggest that you head over to my website, which you find linked in description. Here, you have the possibility to gain access to the best mentorship program in the world. You can get all my courses ranging from the very basics of charting all the way to the more advanced topics. You also have the possibility to gain access to the trading station software with the Telegram notification integrations, one-on-one private mentoring directly with me, the COT data software, which is the software that you often see me use in my analysis, and you also have the possibility to gain access to the entertaining live trading show. So essentially a live stream of all my trades as they're happening live every day. So my entries, exits, how I manage the positions, all streamed live every single day essentially in this Telegram channel, which is obviously private just for members. You also have the possibility to gain access to all my EAs. So essentially all my strategies, which you can then customize to your own preference. And here you see breakdowns of each and every one of my strategies, including a 10-year historical backtest of the strategy on high quality tick data. So essentially backtested on live charts. So basically, I would suggest that you go and check these ones out. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So I really suggest to at least go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure that you drop a like and a comment. It really helps with the creation of new free analysis and education. And I will see you in my next video.